Hi, my name is Asumi Ota, and I'm a partner at D4V, a venture capital in Japan. And thank you for joining me in discussing Japan's venture landscape today. So, you all know Prime Minister Kishida's 10x policy. And he has also published gender equality targets last year. And these are not easy targets. 10 trillion yen of investments to support 100,000 startups, to birth 100 unicorns, and 30% of board members at prime listed companies to be female, and 20% of J startups to have female entrepreneurs. So how are we going to achieve these? Well, so we'll be discussing human capital, financial capital, and regulatory measures and exit options to understand how we are inching towards these targets today. We need people to start companies, but also to join startups in order for the industry to thrive. And we know the Japanese are known to look for stability of large corporations and to be risk-averse. But I think that landscape is changing. The percentage of people leaving large corporations to join startups was only 8% in 2018, but that continues to rise towards 25%. Similarly, more bureaucrats are quitting their ministries to join startups. And people join startups for many reasons, but you wouldn't expect the pay to be one. But in fact, the average salary is actually higher at startups than at traditional corporations in Japan. And it was only 90,000 yen higher at startups in 2020, but it has increased to 580,000 in 2022. Gender gap challenge is definitely still there, but it is slowly improving as well. So these are not exactly the number of female entrepreneurs, as it includes people who have inherited the corporations. But the number of female CEOs has more than doubled over the past 10 years. And behind successful female entrepreneurs are often female investors. Tokyo Women in VC was launched in 2020 with only 29 members. But the community has grown to close to 200 members now. And what that means is that the percentage of female investors at Japan's VCs are increasing. And not just at the junior level, but at a partner level as well. So, going back to the fundraising situation, you know that 2023 wasn't an easy year. Investors stayed cautious, and the fundraising amount decreased. But there has been many positive developments as well. So government funds like JIC and SMRJ continue to invest in Japanese VCs and startups. Both of them together have invested over 700 billion yen into Japanese VCs. GPIF has made its first Japan VC investment a couple years ago. And their other startup activities are not disclosed, but it was recently announced that it will open its doors to more asset managers. How much of that will be invested into the startup industry is unknown, but even if we get 1% of their AUM, that is 2 trillion yen. And the most recent development is that publicly traded mutual funds can now invest up to 15% of their assets into unlisted stocks. That means that retail investors will now have access to invest in startups pre-IPO. And if we simply assume 15% of the current AUM, that is 31 trillion yen. Who else is bullish on the venture industry in Japan? I think it's financial institutions. If you look at the graph, you can see that more than half of new funds launched in 2023 was by financial institutions. And they're also supporting startups by offering more loans and launching venture debt funds. And what's actually interesting about this is that some of that is done in partnership with startups. Mizuho launched a new venture debt fund in November last year in partnership with a startup called Upsider to leverage their AI credit scoring services. And if you look at the top 20 funded companies of last year, half of them actually secured funding by combining equity and debt financing. LE Power raised 15 billion yen out of 25 billion yen in debt. And Timey actually raised all of 13 billion yen in debt. And removal of personal guarantees for bank loans will push debt financing forward as well. Looking at the graph, you can see that potential entrepreneurs, 77% of them actually find offering of personal guarantee as a potential risk of entrepreneurship. But measures are taken to ease that burden. So a new guarantee system that was launched last year offers entrepreneurs up to 35 million yen without personal guarantees. And if banks want to ask for personal guarantees, they now have to go through a much cumbersome process. Going back to the wider fundraising situation, selection and concentration on all stages continued last year as well. While many struggled to fundraise and faced down rounds, some serial entrepreneurs and fast-growing ventures raised big rounds. And serial entrepreneur like Another Ball raised 1.9 billion at the seed round, and that is big in Japan. So with all that new money, but concentrated on quality startups, I think Japan's zombie startup issue might be seeing a different phase as well in the coming years. Japan is known to have a low rate of entrepreneurship, but I think what's equally interesting is that Japan has a low rate of business closures. And what that means is that there are many startups that are not fast-growing, but are surviving. And if this selection and concentration continues, I think Japan's startup cycle might be seeing a different phase in the coming years and come closer to that of the Western nations. And I'm starting to see a glimpse of the change happening already. So since it's a fintech fest, let's talk a little bit about fintech as well. A new license that I keep hearing about is a new financial services intermediation license that allows businesses to conduct intermediary services across banking, insurance, and securities sector under one single registration. And as of February, I saw 3 startups have already obtained this license, but I have spoken to a few more that were in the process of application. What that means is that startups can now gear up their banking and investment platform businesses very quickly, and that will make investments more accessible for new investors. And now that mutual funds can invest in unlisted stocks, let's hope that some of that money will flow back into the venture ecosystem. And one last push the government can offer is utilization of startups in public procurements. You know that in the US, close to 50% of some startups' revenue come from the government. And Japan lags behind. Only 1.3% of the public procurement was used for startups in 2020. But that is changing as well. Startups will be given additional points in the 2024 bidding system. And the digital agency took a head start in the new bidding system, and they have increased the percentage of startup contracts from 16% in 2022 to 35% in 2023. So lastly, the exit environment. Currently, Japanese IPOs are small, both in terms of market cap and offering size. Market cap below 10 billion stayed around 60%, and offering size below 2 billion was about 50%. The median PSR for loss-making IPOs declined from 16.7x in 2021 to 2.6x in 2023, reflecting a decrease in investors' risk appetite. And the Tokyo Stock Exchange requirements change will mean that some of the small IPO companies will be delisted in the coming years. We are currently in the transitional period, but by March 2026, companies that don't meet the new requirements will be delisted. And if you look at the current market, the growth market, 171 out of 563 companies don't meet the threshold of 4 billion yen market cap. So all these changes are to push for larger IPOs and to continuous growth, which often means the involvement of global investors. And you can see that the global offering is slowly but increasing. And if you look at the largest IPOs of last year, the top 10 companies made up for 65% of all the total offering size. And all of them actually involved global investors. And when considering the exit options, it's majority IPOs for Japan, and the opposite is true, M&A for USA. However, the number of M&A is slowly but increasing in Japan as well. Yes, it's mostly still minority investments, but these can turn into M&As later. And looking at some of the largest M&A deals of last year, I think there were two keywords: fintech and global investors. So the largest deal was of a fintech company by a Japanese bank, and the other two were acquired by an American pharma and a Swedish investment firm. And another word I keep hearing about is the swing by IPO. The concept has been around for some time, but I think it's becoming strategically important for many startups. What this means is that a startup is acquired by a large corporation first, grow under the arm for a few years, then IPO. So Yutori, which IPO'd last year, was 51% acquired by Zozo in July 2020, and they just IPO'd last year in December. Companies like Soda and Flat Security, who were recently majority acquired by large corporations, have declared that they are aiming for a swing by IPO in a few years. Also, lastly, digitization is also happening in the M&A industry. M&A Token, which offers AI matching of M&A deals, achieved an IPO within less than 4 years of founding, and the current market cap is 400 billion yen. And let's hope that the efficiencies these platforms offer will further propel growth of M&A market in Japan. So, we have seen that the Kishida policy goes beyond just handing out cash to the managers. Human capital, financial capital, regulatory measures, and exit options are all converging together to push Japan's innovation forward. And I strongly believe that we will see a move to equality for Japanese startups, and for those to carve an expansion path not yet seen. I hope that you can join us to invest and to co-create with Japanese startups, as we will definitely see emergence of more unicorns happening in Japan. Thank you.